Good morning. I'm Brian Curtis.
And I'm Doug Krisner. Here are the stories we're following today.
Congress has averted a partial government shutdown set for this weekend. Ed Baxter with that story and more from San Francisco. Ed?
Yeah, if you want to be a cynic here, Brian, the threat of snow tomorrow motivated Congress. Shutdown averted in any case, as you say. Bloomberg's Laura Davison says the can kicked down the road, which presents a whole list of problems.
Congress has been able to keep the government open only by kind of kicking the can down the road. The one mild success, if you're Mike Johnson, is that you kept your job, at least for now in this. But looking into March, there's a bunch of different things that get a bit more complicated. As you said, they were about halfway through the fiscal year without actually, doing anything beyond just extending last year's budget. And by the time you get to the end of April, that's when mandatory cuts start kicking into effect. So Congress has more of a real deadline there that they need to act and, decide on something that they want to do. And of course, things that got left on the side of the road here, a tax deal with business tax credits, child tax credits, as well as border Ukraine and other foreign aid.
Yeah, so a lot to be done, but done for now. Meanwhile, Donald Trump is in the Ukraine funding fray. He's posted that any deal on Ukraine and border contain every conservative demand for border and immigration changes. The House planned on working on this next week, but this may force GOP leaders to reject any moves toward compromise. President Joe Biden en route to Joint Base Andrews this morning has vowed to continue attacks on Houthi targets until they dismantle the operations that make the attacks on ships in the Red Sea possible.
Are they stopping the Houthis? No. Are they going to continue? Yes.
Yes, and the Pentagon is clarifying what the operation is about. Spokeswoman Sabrina Singh says the U.S. is not at war.
What we took, the actions that Central Command took last night, was to destroy missiles that could be launched and that we're preparing to launch either towards U.S. Navy ships that are in the region, that are in that waterway, or other commercial vessels.
But Houthi Chief Abdul Malik al-Houthi says it's not direct confrontation, says the militants are taking concrete steps to improve their military capabilities. He says the U.S.-UK strikes will not change his stance. And as Pakistan fires missiles into Iran this morning, U.S. is concerned about potential regional spread there. NSC official John Kirby.
These are two well-armed nations, again, we don't want to see an escalation of any armed conflict in the region, certainly between those two countries.
And the spokeswoman for Pakistan's Ministry of Foreign Affairs, Muhammad Balak, says these were very targeted.
Pakistan undertook a series of highly coordinated and specifically targeted precision military strikes against terrorist hideouts in Sistan-o-Baluchistan province of Iran.
She says a first strike to halt further violence. NATO military leaders announcing that the alliance will launch its biggest military exercise in decades next week. NATO military leaders announcing that the alliance will launch its biggest exercise. NATO Supreme Allied Commander U.S. General Christopher Cavalli introducing the exercise. He just marvels at the scale.
Steadfast Defender 24 will be the largest NATO exercise in decades, with participation from approximately 90,000 forces from all 31 allies, plus our good partner, Sweden.
Yeah, adding Sweden in the mix. Global news 24 hours a day, and whenever you want it, with Bloomberg News Now. In San Francisco, I'm Ed Baxter. This is Bloomberg. Brian.
All right, time now for the top business stories of the hour. Well, Spirit Airlines says it has no plans for a bankruptcy-driven restructuring. The airline is now taking a hard look at its balance sheet. We heard from Bloomberg's George Ferguson.
Profitability hasn't been good. I'm sure management's lost its focus as it's gone through this, potential acquisition by JetBlue. And now the difficulty will be, getting the ship righted, getting employees, management focused on getting this airline back to profitability.
Bloomberg's George Ferguson. Spirit shares have been in a tailspin since its merger with JetBlue was blocked in court. Shares have plunged more than 60% over the past 3 days. Today, they closed down 7%. JetBlue fared a little bit better. It was up 7.8%. Doug?
Well, U.S. banking regulators are planning to require banks to tap the Fed's discount window at least once a year. Now, the aim here is to reduce the stigma and ensure that these banks are ready for troubled times. Bloomberg's Katanga Johnson tells us how this might play out.
It's very clear Fed regulators, including the OCC, the Fed, and the FDIC, really want to make the discount window more attractive by requiring them not just to tap the window once a year to make it easier, somewhat of a fire drill, Sue told me, but also to focus on what plans or preparation for accessing it could be or could mean. Regulators really want to see a number of changes to how banks think about the discount window, but liquidity in general.
That is Bloomberg's Katanga Johnson. Now, it was last year the regional banking crisis somewhat revealed that a number of banks were not even set up to quickly borrow from the Fed's discount window in a pinch. Brian?
Well, Blackstone CEO Steve Schwarzman is expecting the Fed to cut interest rates, and they said those cuts are going to have an impact on Wall Street.
The economy is slowing a bit. That's normal with high interest rates. On the other side of the ledger, the expectation that interest rates are going down is creating animal spirits again.
That's Blackstone CEO Steve Schwarzman. As anticipation builds around the impending rate cuts, not everyone is ready to go all in. Today, Atlanta Fed President Raphael Bostic said the worst outcome would be for policymakers to act and to cut rates and then have to raise them again later. That's if inflation were to move higher. Bostic says he sees the Fed's first rate cut coming sometime in the third quarter.
Apple smartwatches without that blood oxygen feature are being sold today at Apple's U.S. retail outlets. Now, this comes following a legal setback in Apple's patent dispute with the tech startup Masimo. That company makes the blood oxygen sensors. Now, Apple itself cannot sell the watches with this feature while an appeal of a U.S. ban plays out. The CEO of Masimo is Joe Chiani. He told us the outcome is best for consumers.
The consumers are better off without it. Apple knew their product wasn't good enough to be relied on medically, but literally they said, and this was in 2020, in the chaos of COVID, this is quotation in their document, if we launch pulse oximetry with our watch, we'll gain market share from Fitbit.
That is Joe Chiani. He is the chief executive officer at Masimo. By the way, Apple believes the appeal process on this particular case will take a year or more. Brian?
Well, TSMC is expecting a return to solid growth this quarter. It gave itself some room to raise capital spending in 2024. It suggests that TSMC anticipates a recovery in smartphone and computing demand. Bloomberg's Ian King says industry shifts toward AI could be fueling the confidence.
Roll back 2 years ago and the chip industry executives were saying this time it's different. We're on a path up. You look at last year and that really wasn't the case. Again, we were down. What is different, though, this time is how some of the end markets are behaving.
And that's Ian King. TSMC shares, the ADRs in New York, were up 9.8%, their biggest intraday jump since May. And it's quite a change from the way the stock traded in Taipei yesterday, where it was only up a little more than 1%. This is Bloomberg Daybreak Asia. And right now I'm joined by Paul Allen in Sydney. And our guest is joining us here live on the program, Chester Dawson, Bloomberg's North American transportation editor, to take a closer look here at Spirit Air. So it's one thing for the stock to struggle as much as it has. It might make it more difficult to raise money. It's a slightly separate topic to be talking about bankruptcy. But it's clear that the board now has an issue at hand. And what are we learning about how close Spirit could get to bankruptcy?
Well, that is the question du jour. And as you noted earlier, the stock has been paying a heavy price for it. The company, however, did say in a statement that came out late today that it is not pursuing or involved in a statutory restructuring, which is a kind of a jargonistic and legalistic way of saying that they're not planning for bankruptcy. It has been a matter of a lot of speculation. A number of analysts on Wall Street have openly said that is a very real possibility. But the company says it's taking measures to shore up its balance sheet and is hoping to, right the ship.
All right, taking measures. What does that mean? Are we talking about job cuts, slashing routes? What's the plan?
Well, that is also a very good question. They have not said much more beyond what they had kind of previously outlined in terms of efforts to, for example, ground parts of its fleet, delay the on-take of some airplanes, and other measures, perhaps involving its debt load. So it's a little vague exactly what that means, but you're right. Typically, when you hear that language, you do think about drastic cost cuts, including job reductions. If they're thinking that, they're not saying so publicly yet.
So they're not even talking about bankruptcy protection, much less liquidation. But certainly, people in the market have been at least thinking about that, the possibility of liquidation. And it's ironic because what that would do for prices, one only knows. But it probably wouldn't be what the judge was expecting. I'm just musing aloud a little bit here. I mean, is there any chance that to raise funds that Spirit could raise prices? It's a low cost carrier. But could he raise prices?
Well, you put your finger on it. The whole point of Spirit is to be an ultra low cost carrier. So in theory, it might be able to try. But, the whole reason you go to Spirit is to get a super cheap fare and kind of a no frills flight experience. Now, the company hasn't said whether it plans to appeal the court ruling that broke up plans for the takeover by JetBlue. However, it's very unclear, if it can survive as an independent entity, not just because it had kind of planned to be taken over by JetBlue, but because the environment has deteriorated so much since that deal was announced. It's been very bad for all low-cost carriers, including JetBlue, which isn't quite an ultra-low-cost carrier like Spirit, but is still, kind of a more of a discount carrier than, say, Delta is. But those companies, being very domestic and very fare focused, have not been doing well. The environment has deteriorated a lot. So if it's left to stand on its own two legs, so to speak, Spirit faces a very difficult future. So it's kind of unclear, what comes next. Everybody's kind of waiting for the next shoe to drop. Clearly, the company's got to do more, but investors aren't waiting. As you noted, they're bailing.
Yeah, they sure are. The share price down 62% in 3 days. Is there any feeling that we're at the bottom yet, or is there the potential for further losses here?
Well, it's a little hard to say, but it is interesting that when the company finally came out with its statement after the close of trading in New York, the shares basically traded unchanged in the post market. And obviously, they were down during the day, kind of in a free fall. But I guess there's some hope that maybe this, this kind of very late in the day statement by the company that it's not preparing for bankruptcy, at least not immediately, will be some solace to investors. But we really won't know, I guess, until the market opens in New York tomorrow. But it does feel like the company is in kind of a desperate struggle to survive.
You wonder what sort of message that would send to the Justice Department and to the FTC and just generally to antitrust. The antitrust regulators, they're concerned about people. They don't care about the shareholders. I mean, that's for other people to worry about. But if the result of this is that the airline goes bust, I wonder what sort of message it would send to the antitrust people.
Well, it would be an incredible irony, wouldn't it, if by saving or trying to save Spirit's independence, that actually was a death sentence. I think you're right. I think basically, the legal eagles and the court, clearly was thinking about, the spirit of yore, not maybe so much about what would happen if the deal was unraveled. And of course, we want to be careful. The company has not declared bankruptcy and it's still flying. And, even if it were to do something like that, and I'm just speculating now, chances are they would continue operations. But, obviously, whenever the B word is floated, it scares investors quite a bit. And, the bad news keeps coming. We just got word late of some action by the rating agencies, which are also sitting up and taking notice. And that doesn't bode too well for Spirit either.
Just quickly, Chester, what's the legacy of Spirit's management going to be?
Well, that's a good question, too, because when, they were initially approached by JetBlue, they rebuffed the offer. In fact, they were in favor of a rival takeover bid from Frontier, which is another ultra low-cost carrier. effectively there was something of a shareholder revolt, and the board had to backtrack and did accept a sweetened bid from JetBlue. But now you got to look back and wonder about culpability, because there is some question whether the board made the right call there, the way the events have played out. And
all right,
there might be some
Chester.
questions.
Yeah, absolutely. Very good point. This is Bloomberg Daybreak Asia, your morning brief on the stories making news from Hong Kong to Singapore and Wall Street.
Look for us on your podcast feed every day on Apple, Spotify, and anywhere else you get your podcast.
You can also listen live each day on Bloomberg 1130 in New York, Bloomberg 99.1 in Washington, Bloomberg 106.1 in Boston, and Bloomberg 960 in San Francisco.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130.
Plus, listen coast to coast on the Bloomberg Business app, SiriusXM, the iHeartRadio app, and on Bloomberg.com. I'm Brian Curtis.
And I'm Doug Krisner. Join us again tomorrow for all the news you need to start your day right here on Bloomberg Daybreak Asia.